It's June 4th, 2026, and things are interesting. I got an email alert last night that the mortgage backed securities went down 31 basis points. That's a lot. So I was expecting this morning when I got my rates that the rates would have gone up. And that is not what happened. Rates stayed the same or went down across the board. So let me start with the rates. And why I give you the rates is because I have so many customers reaching out to me just wanting to know the rates. And I'm just like, well, you could Google this. Or if you want rates specific to your situation, aka your credit score, your income, your zip code, I'd be happy to do that. They're like, no, I just want the rate. I'm like, okay, well, this will save me a lot of time, actually. So let's start with the rates. 30-year agency, 6.125%. 15-year agency, 5.5%. 5-year ARM, 5.99%. 30-year FHA full doc, new time home buyers, and 30-year VA full doc, veterans and active service members, is at 5. They're both at 5.75%. 30-year non-QM is at 6.375%, and 30-year VA IRRRL is at 5.74%. 30-year DSCR is at 6.25%, and 30-year Jumbo Smart, which is for all those high-end luxury property buyers, that's at 6.125%. Now, when you know that the mortgage-backed securities have gone down by 31 basis points, and you would assume that the rates were going to go up, and the rates don't go up, and the rates even start to come down, you know that that's because a lot of people move their money into safer places in the market. Specifically, it would take too long to research that, and it would be a lot of speculation. So I'll read the little breakdown. The bond market steadied, with the 10-year Treasury yield down 2 basis points to 4.47%, as some investors appeared to move into safer assets amid renewed geopolitical tension. While stocks came under pressure, bonds and oil found some support even as fighting in Lebanon continued, highlighting the uncertain outlook. The standoff has kept markets focused on the risk that higher oil prices could push inflation back up. The slight decrease in yields suggests investors are taking a more cautious stance and waiting for clearer direction. Following a broader recent rise in yields, focus now turns to upcoming data, including Friday's employment report, alongside several Fed speakers, which could provide further insight into the rate outlook. So, I would love if these rates going down it would continue. Is it going to continue? Well, tomorrow will be a big day, depending on the employment report and depending on what happens, between Iran and the United States and in Lebanon, and depending on what the Fed speakers even say. So that is your blanket uniform situation. If you want something specific to your situation, your profile, credit score, everything, be hesitant to fill out those forms on places that rhyme with Lee, bait, update, and bending bee, because allegedly you could be contacted by so many people your phone no longer works. Your battery starts getting hot. People can't call you. You can't call anybody. And I've heard people say it's extremely frustrating. So protect yourself from that. On a side note, I'm going to be putting out a video at a later time that is a little bit of a good news situation. And some of the good news is housing prices have been going down. They've gone down by about 2.2% over the last year, which means get aggressive in your negotiation if you find a house you love and you're a home buyer. You might be surprised because the longer that house is on the market, the more they have to drop the price, and they know that prices are going to keep going down. They might just accept it, or they'll give you a counter offer that you might really like. So good luck, and I'll talk to y'all soon.